What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Uber. The company has just reported its Q1 2019 results, its first quarter as a public company. I just got off the conference call, so we're going to go through all of the company's financials, key business metrics. Then at the end, I'm going to give you my analysis on sort of why I'm pretty bearish on Uber. To start, let's jump right into Hypercharts. You can go to www.hypercharts.co/Uber. We've updated all of their key performance indicators and financials for the Q1 results. The first statistic that Uber reports every quarter is its monthly active platform customers, how many people are essentially using its Eats or ride sharing service on a monthly basis. We're looking at 93 million active platform customers in Q1, up from 91 million in Q4 and up from about 70 million in Q1 2018. The second metric that Uber always reports is trips, how many people rode on its ride sharing platform. We're looking at just over 1.5 billion in Q1, a new record, up from 1.493 in Q4 and 1.136 billion in Q1 2018. Then we go to gross bookings. This is one of my favorite ways to break down Uber's business. Essentially, whenever you pay $10 for a ride, those $10, Uber's marks down as $10 worth of gross bookings, which is different than the revenue, which is Uber's cut that they get from the ride after giving the rider their revenue. But this is a great overall way to see the size and scope of Uber's business and how that's changing. So here we have ride sharing in blue, which is obviously Uber's main business. That's the main driver here. But what's interesting is you can actually see that in Q1 it was 11.446 billion, which is actually a slight decrease from the quarter before. So Uber's core ride sharing business is decreasing, shrinking sequentially on a core level. I don't think that's a good sign. But if we layer in Uber Eats, it resumes to growth, and that's because Uber Eats is the rapidly growing food delivery business for Uber, which was just over 3 billion in bookings in Q1, up from over 100% from just about 1.5 billion in Q1 2018. Then we have the other bets revenue line. So this gross bookings line is going to be a combination of Uber Freight and their e-bike solution, Jump, the company they acquired, and sort of their other different growth initiatives. As we can see, that was gross bookings there, 132 million, up significantly from 40 million in Q1 a year ago, but sort of stalling out growth here. And still, if we zoom out, a very, very small piece of Uber overall. Now that we checked out the bookings, let's check out the financials and actually how this broke down to revenue. So for the quarter, Uber reported 3.1 billion in revenue, up 20% from 2.6 billion in Q1 2018. Now we're going to go through the breakdown of where this revenue came from and what is going on. So for the first line item, main thing, ride sharing business, requesting a ride on the Uber app. I'm sure you've all done it. That is their main revenue driver. That was 2.4 billion in revenue, up only 9% year over year. This is what I really wanted to highlight. The growth in Uber's core business is so disappointing. I was at lunch with someone today discussing, how small of a fraction of total miles that ride sharing companies have taken from the transport market, and how huge of a growth, how much potential there is for growth in this market for Uber to capture more and more of the miles driven. But I'm not seeing any growth in their core ride sharing business. 9% is so underwhelming for something that should be, Lyft is growing at 90% in its core ride sharing business, almost an order of magnitude more. So this to me is super disappointing. And then if we move down, Uber Eats is the bright spot for Uber. They're not making money on it, but this is rapidly growing as a revenue line item, up 89% year over year, still much smaller than the ride sharing business, but this is sort of what they're touting as their growth driver. Then we have a couple other things there, but not much. They don't add up to much in revenue, and that is the total core platform revenue. The ride sharing and Eats, those Uber businesses, are only growing at 16% right now. I mean, so even when you layer in the rapidly growing Uber Eats business, we're looking at a business that is not even growing at 20%. I mean, this is, to me, the flaw in the story about Uber. How are you this Amazon of transport attacking a huge opportunity with a game-changing vision to change the entire industry, yet you're only growing at 16%? Something doesn't add up. Why is the growth slowing so dramatically? But anyway, the other line item they have is that other bets revenue, which was up 263%, but once again, such a small piece of the overall business that the overall revenue for Uber is up just 20% year over year. Now, just to quickly highlight the geographic breakdown, because I think this is interesting. You can see that even here, no region is individually growing over 30%. So it's not like they're in some more mature regions and other places are growing faster. Like nowhere in anywhere in the world is Uber really a rapidly growing business. Now let's look at some visuals. You can see that the quarterly financials, that black line, the revenue, has been stalling out in terms of overall growth, and the losses are massive. In Q1 2017, they lost $800 million. In Q1 2019, they lost over $1 billion. And so the business is getting less profitable with scale. Despite doubling revenue, their losses increased. So we're not seeing, impressive unit economics for Uber's business. This is the bear case for me. Like, they're not improving profitability profitability at all. It's actually getting worse. And so this, just to highlight, why this is such a concern right now, is that the growth rate is declining even though the losses aren't improving. So we have a growth rate that was 70% 5 quarters ago and now is 20% and looks like it's going to continue to keep shrinking. And this isn't even doing justice into the underlying story. If you take a look at the gross profit for Uber, this looks even worse than the revenue line. You can see that it was growing nicely, but until 2018 has basically flatlined. And if we look at the year-over-year growth of their gross profit, you can see it went from 100% to now declining year over year to -1%. If we overlay the revenue growth with the gross profit growth rate, you'll see why Uber's business is really, really struggling. Not only is their revenue growth slowing, but their gross profit is now actually shrinking on top of that. And so I think Uber's business is no longer a growth story. Moving to the annual financials, this is what Uber's looked like since 2014. Here are my estimates for 2019. I'm assuming about 18% overall growth and, actually improving operating income throughout the year. If they kept up the 1 billion plus rate of Q1, they would actually have lost about 4.2 billion, but now I have them losing about 3.5 billion, so maybe that's too optimistic, but we'll see. But an 18% growth rate. But this is what I think is really interesting, is we're looking at an asset that was growing 300%, then 90%, 100%, then 42% last year, now 18% in 2019. I mean, this is the growth story for Uber is falling apart. I don't know how to say that simply enough. So on the conference call, I thought it was really interesting to see, how are they going to build confidence in the story, get people pumped up. They walk through a ton of metrics, and I'll link to this slideshow of all of these adjusted revenue and adjusted EBITDA metrics, which are honestly, like, some of them are helpful, but they do more confusing than good. I was just looking at the GAAP statements, and I just get the sense that there isn't an excitement growth engine in Uber's business, and the Eats business isn't going to be able to save them anytime soon. So they're hyping up all these synergies between Uber Eats and, I don't know. The tone of the conference call, nothing excites me about Uber's business. And they were trying to hype up the autonomy piece, saying that they just raised $1 billion at a $7.5 billion valuation for the Uber Autonomous Technology Group. They're hyping this up as the growth engine. They say that they're developing a full stack of autonomy hardware and software, but also partnering with people. They've signed up Daimler and Toyota to be partners on their autonomous vehicle group. But I think, this is just a distraction. All they're doing with the Autonomous Vehicle Technologies Group is spending a ton of money and not actually, I don't know of any concrete progress or timeline that they have to actually roll this out and generate value. It's just a big way to generate marketing hype and spend millions and millions of dollars. So we have a core business who's growing now under 20%, still with horrible operating margins of about -30% operating margins, slowing growth, and no real autonomous strategy. So the only thing Uber has going for it, in my opinion, is they have so much cash. They just completed this IPO. They had about 5 to 6 billion on their balance sheet pre-IPO. They raised another 8 billion in the IPO. So we're looking at a business right now that has 12 or 13 billion dollars in cash to spend. In the last quarter, they burned about 722 million dollars in operating cash flow. If you include CapEx, maybe a couple hundred million more. So now let's just estimate Uber's burning about a little less than $1 billion a quarter. To me, they actually have 3 years of runway at that rate because they have a $12 billion cushion. So Uber has enough cash in the bank to where they can start making acquisitions, or they can just simply, continue to work step by step to improve their business model, and they have a long runway to do that. And so I'm just going to be really interested to see how this story plays out. I mean, Uber, one of the largest tech IPOs in history, a fascinating company changing the way that transportation works, yet is this experiment in this new zero interest rate VC bubble environment where you have a company that's worth $70 billion that is on track to do $13.3 billion in revenue and lose $3.5 billion. I mean, is the only reason Uber is successful is because they're selling you a $5 ride for $4, and of course they're taking a ton of market share and revenue, because that's what the financials illustrate. It's not that hard to sell $1 for 75 cents, and that's just why I'm so concerned about Uber, is because that's, I think, what this is at the end of the day. They were way cheaper than cabs, they're way cheaper than alternatives, and they were just losing money on every single ride. And so now they're in this catch-22 position of, are we going to raise prices, and what's that going to do to engagement and the unit economics of the company? So this will be fascinating to watch, but I am not bullish on this company. I think Uber needs to be putting up growth rates in the 30% for their story to be believable, and they are, getting further and further away from that with each quarter. So would love to know what you think in the comments below. Are you as bearish on Uber? What did you think of the quarter? Are you investing in the company? Let me know. Anyway, this is Hyperchange. Huge shout out to our Patreon supporters, producers, fun of the channel. I'll see you guys next time. Peace.